Good morning to all traders and welcome to this Thursday's market insights video. Today is the 10th of December. We saw slides in the markets yesterday as investors seem to start weighing the stimulus stalemate as well as some news around the vaccination. Now, in the UK specifically, there were a couple of allergic reactions to the vaccinations, and that is causing a little bit of concern to the people that are likely to receive the antidote. Now, the situation between the UK and the EU continues to remain on a stalemate as well. Yesterday, Boris met with Ursula von der Leyen, and we realized, and they realized, that it's very unlikely that the UK is going to accept what the European Union is actually putting on the table. And they did put a hard deadline as well, and this is on Sunday. The day that the UK must either decide whether they want to compromise or whether they want to go for an Brexit with a no deal. Now, at the same time, today we'll have the ECB, right? The ECB seems to me actually to be a case where it has been priced in a bit. That might be the reason that the euro has been going a little bit higher over the past few trading sessions, I would say. It's not just dollar weakness. And we're likely to see the ECB continue the bond buying, but, well, we're going to have some indication as to how long this is going to last, because it's going to have repercussions for other banks and also the RBA and the RBNZ. So I want to talk about the EURUSD today, the GBPUSD, of course, and also I want to talk about the Kiwi, the New Zealand against the US dollar, as we are waiting for the EU summit to start, and of course another day tomorrow for it, where we're going to receive more information, not just around Brexit, but also whether we're going to have the ECB pushing through the recovery fund. Poland and some other countries are actually against, while at the same time we have the stimulus deal remain on a stalemate, and also cases and also hospitalizations and deaths keep rising with new record highs. Starting off with the euro dollar, we talked about this upside move, right, last week. Actually, it was on Tuesday, I'm sorry. I was looking at 121.69, right? That has been taken care of. Now, what we really need to look here is whether we're going to have a correction down here and then a continuation to the upside for 122.63 and then perhaps even 123.86, or continue lower, because this 138 is for the alternative scenario, because we talked about the opportunity this being at an ABC, and 1, 2, 3, 4, and 5. This, in this case, that's why we've actually marked the 38.2, would be an expanded, actually would be a running flat in my opinion, because I've marked the 117 over here. The expanded flat goes below the previous wave one, so that wouldn't really stand as on the market structure perspective. It would start as an impulse on the upside. So this could be this scenario, right? So we really need to break back again above the 121.69 to consider this as an impulse, right? Now, that said, I do believe we're going to see that impulse coming through eventually, but I'm waiting for another move to the downside. This move over here looks corrective. There is no way it looks impulsive. So most likely that we're going to get 4 and then 5 for minor wave 3, okay? Now, if we take the Fibonacci extension for waves 1 and 2, the 161 brings us to 122.63, okay? 100 Fibonacci is where we currently stand, around that level, 120.50 or so. There is potential that we're going to move a bit lower to take out this previous top or so. I mean, the potential for the downside is actually 119.20 as well. But to be honest, I think we're going to stop anywhere around 120.13 and 120.66, and then we will start moving higher. Now, I've got 1, 2, 3, 4, and 5 here. It could be a case where this is 1, 2. We're going to see wave 3 coming here, and then we're going to get 4 and 5, okay? It's not unlikely, because I do not like this structure as an impulse. I mean, it's fine. We've got 1, 2, 3, 4, and 5, which the fifth wave is very small. So it could be a case where, let me just clean this out a bit. It could be a case where this is 1, 2, this is 3, this is 4, and we're going to get another 5, 4, 3, and then we're going to get 4, right? In either case, we are likely to correct a little bit longer. Maybe this is going to cause a decline or not. But in either case, I think we're going to remain between the 120, 169 and 120, 12 range until we break higher. Okay. Now let's jump on the pound. Pound, we talked about this move on the downside on Tuesday. Yeah. Here's what I'm looking at. Yeah, just as a reminder, we talked about this being an ending diagonal. W, X, and Y for X, and then we're waiting for wave Y, okay, to end this bearish sequence. Now, well, we went down over here, created fresh low, which is good indication, 1, 2, 3. Are we going to see this continue down? I'm not particularly fan, you know, of this move to the downside as an impulse because it looks like an ABC, yeah. Which suggests that we could be in a scenario where this is 1, 2, this is 3, this is 4, and we're going to get another wave 5, and then complete all these waves up here, and then start moving lower. Okay, it's very possible because, as I said, I don't like this. Or the other scenario, since this is a complex correction, in either case, it could be an ABC. Yeah, indeed. And then we'll get the W, and then we'll get the X, and then we'll get the Y. And last, let's have a quick look on QE. QE actually has performed quite well over the past few weeks, right? Along with the euro. Here, we've had a wave 4 as a triangle, and we moved all the way up to take out wave 5 of X. Yeah. Now, if we take the 100 Fibonacci of waves 1 and 2, we've had wave 3 done at 200 Fibonacci and wave 5 at the 300 Fibonacci over here, right? Now, if we take the 3 and 4 Fibonacci, waves 3 and 4, the sixth one brings us to where we currently stand around, and the 100 Fibonacci is where we ended this impulse to the upside, right? Which is a good cluster with the Fibonacci of waves 1 and 2. That's why the 0.71 makes a very good level, okay? Now, as with the pound, I don't like this as an impulse, right? I don't like this as an impulse. It looks corrective. So, although I'm expecting prices to move lower, we can even go down to the 0.67, okay? Because wave 1 is far from here, and then still move higher, yeah? I am seeing this as a correction, right? Now, it could be a case where we are gonna see this 69.95, you know, lasting, actually holding firm, and then move again up, provide a nice false break. This would become a 1, 2, 3, 4, and 5 in this scenario, right? And that would be the end of it. Have a very nice signal on the both RSI and MACD, okay? And I'm looking at this, at least in the short term, as a pullback down to perhaps the 69.80, okay, in case we break the 69.95. So this will be all for the day. Thank you for watching, and we will speak again tomorrow.